call the meeting to order.
Motion to open.
Well, dear. Right, so welcome all to regular meeting of the Town of Buchanan Audit Committee, November 14th, 2024. We have all 5 members of the Audit Committee present in person, so no apologies. So let's get the meeting underway. Just for everyone's knowledge, we are going to, as we're allowed to do, move the agenda around some to accommodate various people. So we'll start with the minutes. Then I have asked Scott Hobbs, who is the chairman of the Housing Authority, to join us. I think he's coming in person. He asked if he can come at 8:45 and give us 15 minutes. If he does, we will then, when he gets here, go to item 3D. And then welcome, Catherine. That would mean, as I said to you, hopefully 15 minutes. If he's here on time, by 9 o'clock, we'll turn it to you and the finance department and discuss item 2, which is the audit update, as well as item 4, which is related parties. And then Catherine can get back to work. And then if everyone else was patient enough with us, we can turn to item 3, which is the monthly report. So then we'll go to item 5. Okay, just by way of background. So let's go back to, and Mary, I suggest just for, we put the minutes in the order they are in the agenda, even though we're going to talk out of order, right? If that's okay.
Fine.
Yeah. So item 1 is the minutes. We need a vote to approve the minutes from the regular meeting we had on September 26th.
Six.
Yep. Are there, which have been posted in draft. So are there any comments on those minutes, suggested changes from anyone? No? Okay, so can I have a proposal to
Also move to adopt
approve?
minutes of
Second.
Second.
All in favor? Minutes are adopted, so we can post those as final. And then as the second meeting, we have to, which was a special virtual meeting on October 23rd, which was to appoint the subcommittee to oversee the internal audit work to be performed by our outsourced internal audit for firms through to the end of this fiscal year, June 30th, 2025. That was a virtual meeting. Tony was absent. The other 4 of us were there, so we had a quorum. Those minutes are posted in draft as well. So I would propose, any comments, first of all, on those minutes? No? No. Proposal to approve?
I'll propose we approve them.
Okay. Did I get a second for that?
Second.
All right. All in favor? All right. So, all right, that's item 1. That didn't take long. So, bearing in mind we might have to switch subjects, why don't we go to item 2, which is the independent audit update. And, Anne, I guess we'll ask you to lead this discussion. I suppose, among other things, what we want to know is, and from you and Sean and Catherine, are there any issues, complexities, problems, things you are dealing with that we should know about as we go along with the audit? Secondly, obviously, we're keen to know, and you and I have gone back and forth on this a little bit, timing of when we will receive drafts, both the ACFR and the MD&A. And obviously, the most critical question, are we on track to to have drafts, final drafts in time to go through everything that we can at our scheduled December 2nd meeting, sign off and recommend approval to the council. So I mean, that's what we're looking for. Yeah, anything I'm missing in terms, I mean, obviously this will be a back and forth as we go with Anne and Sean and the auditors. Okay, why don't you fire away?
So currently, right now, we have our main thing that we're cleaning up, right, or not cleaning, we're finalizing our capital assets. Our capital assets, if you can imagine, we had two major buildings come on, the Playhouse and 220 Elm, even though that was August of last year. So that's a lot of fixed assets to go through and make sure the appropriate things are classified in the right categories. So we're wrapping that up literally right now. We have staff in last weekend, and right now we're wrapping up to get all those schedules in place that are needed. And we just have one more schedule, which is easy and unauthorized but unissued debt, because we closed.
Sorry, before you just stop you before you go on to debt, does that mean in making sure that all capital expenditures that are attributable, those are in the right bucket and added, and things that shouldn't be there?
Correct. I
not
literally went through
are
all our
two,
assets to
right.
make sure, because
So
there's a lot of history. Yeah,
what's in
a lot of CIPs. Want to make sure those CIPs should be moved and activated if they should be. So it was literally looking up their last invoice, looking is the project final. There's a new GASB rule that Catherine may be able to talk to in more in depth in terms of our capital asset threshold is $10,000 and above for an asset, but there's a new GASB ruling that you may spend 30,000. It could be 30 pieces, but because it's over the 10,000, you now capitalize that 30,000, even though individually those assets underneath don't hit your threshold. So we're making sure we try and scrub through and get all those assets as well, that if we paid for a large amount, we put that into our capital assets. So we're going through our general fund, we're going through all our different funds where we might buy something that wouldn't hit us normally to make sure we're classifying that. So
Those like assets, or are those just part of the same project?
So if I had some that's coming out, but they're two different types of assets put under it, no. But it's as a whole, if it's that, if I bought computers and I spent 30, 40,000, we would capitalize that.
Even though each one is $1,500.
Yes,
or
yes,
whatever.
yeah. New rule. So
Can I just check? I mean, Catherine, Taka, just to check the audio. You can hear us all right? Can you? Both of
Yes,
you?
I can hear you.
Thank you.
so we're finalizing those schedules, and we put it together a CAFR. So at this point, PKF has gone through most of their testing. They're waiting on us to give us the fixed assets, which I don't have a problem with, that we'll get that to them this week. Then the plan would be to ship out, we would get the draft, start working on the MD&A to get all that information up to date, the verbiage related to all the schedules in place, and then email. What we did last year was we emailed the draft out to the boards who could look at, or to the committee, who would look at it, put their comments on it, and centralize it to one person, whether it's Robin or someone you would pick on the committee, centralize those questions into that one person to share with us. And then we would keep that going, to keep that line going, to keep, so we don't have to wait for the December 2nd meeting. That's why sometimes we're like, do we have 2 meetings in November? It seems to be more effective to do this email back and forth. But just be conscious, you can't put everyone else on the email for FOI reasons. So that's why we have a point.
Could I interject? So last year as secretary, Chuck performed that role. I mean, Mary, if you want to do it, it's fine with me.
Sure.
But my thinking was that as you know, I was going to say the only survivor of the sinking in the Titanic, but I shouldn't put it that way. The only surviving member of the audit committee, don't mean it that. It would be unfair to ask any of you new people to do it. But if you, Janet, or any of you, or you, Mary, want to do it, that's fine. But I'm willing to just be the receiver of comments on the MD&A and the financial statements, package them and send them to. And would you like to do it, or would you like me to do it?
Well, the continuity is probably good to have for you, because there's probably some things you could answer in the go back and forth without having to reach out and include the outside, I'll call them the outsiders, you know, outside of our committee. But so that would be my take was that for this time, I would welcome you because I think that the history is, I'm familiar with financial statements from a long time ago, but I saw the final project, I saw the final book. And the book in process.
Look,
So
would I rather
that's-
do that or take a walk in Waverley Park? I think the question answer is clear, but I,
I second Maria's suggestion.
this time I'm willing to do it. It's okay. You okay with
Thank
that,
you.
Janet?
Thanks,
Okay.
Robin. I
So you
appreciate
said it
that.
to me. Okay. So when that's settled, let's move on.
What we're planning to do right now.
And do
Okay.
you
Um,
have a sense on the timing of when we might see that draft?
Hopefully next week. That's what I'm looking at next week.
For both MD&A and
Yes.
ACFR?
Yes.
Good.
Because right now is PKF is waiting for a fixed capital asset schedule before they can turn over the draft back to us. So that's on us. So I know I need to get my capital assets done this week. So that's the plan right
Kind of the
now.
last thing. You were going to say something about debt or bonding or something, were you?
Unissued, authorized.
They're
but
smaller
unissued, yeah.
schedule, working on it's a minor
Oh,
schedule. So that's it.
Nothing.
So
okay.
most everything, it's been a very in-depth audit, very good.
So it's going well.
It's
yeah?
going
Well,
very
thank
well.
you, Diane.
Well,
And
the
Sean, team.
town, everything with the town, the departments, the board, a lot of testing. A lot of requests, things you want to know that's happening. So a lot of involvement with departments and
Sean, anything you want to add?
No, I mean, next week, I'm on target to finish our portions of MD&A transmittal. Next week. is fine.
Okay. For the record, you're not at the mic. Scott is on time as well. Catherine, from your side, I mean, what we're hearing from the finance department is things are on track. The audit is on track.
Yes, I would agree. Once we get the capital assets from Ann, we'll put them in the financial statements. I'll finish my final review and then send the draft to Ann.
Okay. So next week seems, what, as Anne said, what it looks like without
Yes,
picking a day.
Yep.
Okay.
And no major issues on the audit so far?
nothing we've seen.
Okay.
I do have a question. With that new requirement, is that going to change? How's those expenditures going to be reflected against budget in the capitalizing of those
so
items?
our assets are majority of our assets are in our capital fund,
Right.
601. We have a capital asset fund where those assets are
Right.
loaded up in there. Then the other difference is going to be our proprietary fund. That has its own depreciation and all its
Right.
assets in that fund where it's going to affect the P&L from when you take it from the budgetary and move it up, the different modified accrual. That's where that change is going to happen.
My
If it-
question more is it going to put us over budget? Because instead of having certain things that we could have expended, that we have to capitalize. So is that capital budget going to be big enough now to include all those things that you're going to move over there?
So they're already in there.
they
So
are,
yeah,
okay.
it's I'm just trying to think of police cameras or something
So
like
it's
that.
not a big dollar amount that you're talking about.
No.
Okay.
But most of those assets or what we're looking at, the expenditures for the year are in our, what we call our 3601. What we have to bring in is our tax, when we do our budget, we have a tax supported capital fund as well. So
Right.
therefore assets under 50. Most of the time, most of them wouldn't have made it because as a whole, collectively, they were under 10.
Correct.
We went through all them to make sure. So that's where they would be picked up as an asset. Okay. Yeah, capitalized, should I say.
Catherine, that's it? On this?
That's it.
Okay. So I believe that completes item 2 on
Correct.
the agenda. And right on time, the chairman of the Housing Commission has entered the room. So we'll go to item, what is it?
3D?
3D. Perfect timing, Scott. So thank you for taking the time to join us. Sure, good to see you again, as always. So do you know any or all of the people up on the stage?
Not sure. I've probably met everyone at least once or twice sometime along the years or something. but-
Mary Davis Cody, who has
Jan.
spent many years on the finance, Board of Finance,
Mhm.
and is now part of the Audit Committee, and the Secretary Janet Lanaway, who has served an earlier term on the Audit Committee and rejoined this term. Bill Bradley, also new on the Audit Committee, as is Tony Ceci. So all eminently qualified for the role they're here, as are you for your role.
You guys are probably more qualified than I am, so it's all good.
Scott, we've all read about the acquisition of the Avalon property. Excuse me, I've already forgotten the new name, but the financing of it is complicated to some of us. There is an element of town financing involved, but relative to the 75 million, a relatively small element. But it would be good to understand for
Sure.
people like accountants like us, the big picture and how the 4 million or whatever fits into it. And also, I think, what it does for affordable housing in town, given our people living there now are tenants, and
Sure.
the moratorium or anything. And you got 15 minutes because you've got to get to work.
We'll zip right on. We'll zip right through here. So, so thank you for having me and stuff. And don't want that too loud under here. So Riverwood, we ended up purchasing that, and purchase price was just under 75 million. There was about $2.5 million of added expenses from that. Housing Authority had roughly, and I'm going to be off by numbers under this, and eventually we'll do our final accounting, but roughly $2.5 million of funds that we had generated from Canaan Parish Development and other income. And then we had added in about $1 million in deferred developer fee from the Affordable Housing Fund here in New Canaan. That deferred development fee came from way back in Millport. And we put all of that into the deal. The town loaned in $4 million. And then we borrowed just under $50 million in a credit enhanced essential housing bond from Fannie Mae.
So we being the
Housing Authority.
housing authority.
So this is a pure Housing Authority deal. The money borrowed from the town was borrowed by the Housing Authority. And we use that as
Did you
equity.
say Fannie Mae? Excuse me. Yeah.
So it's Fannie Mae. And then we did subordinate bond debt of about $24 million, which has been financed at about 6%. Royal Bank of Canada was extremely helpful, and Bob Spangler was a key player in all of this, and he was helpful and able to make the deal happen because there was a little poison pill inside of the Fannie bond that just made it very difficult to understand the bonds and then actually make them survive any sort of a stress test. So even though the bonds had surplus of 25% post-senior debt flow, debt service, the bonds had 25% excess outside of subordinate debt service. So hundreds of thousands of dollars, which could not be considered by the subordinate bond holders. And because of the structure, it means that the subordinate bond debt fails under almost every stress test.
Mhm.
And it was very frustrating to get through that process. And some of the stuff didn't become apparent until the very end. So as we did the deal, we now have for Housing Authority, we'll have a $2 million debt service reserve that'll be set up over at Bankwell, and that'll be available to the bondholders. We'll be earning interest on it, and a lot of that interest will be paid back toward the town. Housing Authority itself has somewhere around $500,000 right now. We're probably going to come back to the town and ask for an additional some amount of money, $500,000 or $1 million or something, in order to make sure that we're financially set up correctly in order to manage the properties that we have. Because again, we did put all of our cash into the deal.
So the cash flows from the property will be servicing most of the debt, the bonds.
If we're remotely close to pro forma, the deal works on its own. There was just a covenant again in the bond that we were the second people to use this form of this bond. And the only other people had been the LA Housing Authority, which typically New Canaan and LA get mentioned in the same breath and stuff. But and we kept running, we had originally believed we could actually finance literally 100%, including expenses. And that's what people understood that we could do. And then as the deal kept moving along, it's sort of like, well, Fannie can't do that much. We can't do that. And again, it all basically comes down to equity at the end of the day. And sure enough, we had to put in more, but we still ended up doing exceptionally well as far as the leverage on this. And still, it all pencils out, it inevitably in the first year, we'll probably have a couple extra expenses that we didn't think about. And we'll just see how everything comes together. But it should be a lucrative deal that actually produces cash and works very nicely.
Has it closed? Yes.
So Riverwood has 104 units. Of those 104 units, 21 of them will become affordable at area median income, AMI levels, which are not, they count toward our 10% goal of affordable housing, but they do not count toward moratorium.
Okay.
Now, we don't need any more moratorium points.
5
years.
We got it.
Exactly.
We got it.
So
A bit of a fight, but we got it. Yeah.
How are property taxes treated when it was Avalon versus now in terms of what the town is getting?
sure. So we did a pilot so technically housing authority owned properties don't owe any taxes. However, the towns can go ahead and negotiate that with housing authorities, and they do. And we obviously have a friendly relationship internally as opposed to many housing authority in towns. And so we did something called a pilot program, so a payment in lieu of taxes. And essentially we lowered the taxes by, I think it was like 8%. We lowered them down to 7%. And that basically pretty well covers kind of like our conversion to the AMI units in any event. And it allowed the pro forma to come together. So the town ends up about $100,000 less than what Avalon paid.
Per annum. In perpetuity, the town's losing $100,000.
Correct.
And the trade-off is it's part of the whole affordable housing. plan.
Exactly.
Okay,
Close out 10%. Yeah.
okay.
Affordable housing, I mean, no matter what you do, affordable housing costs money, takes time, and it increases density. With Riverwood, we don't have to increase density, which is huge. And time we actually control when we convert things. There's still going to be a money component because, ultimately when you move something from market rate to affordable, you cut the rents. As you cut the rent, you cut what you have for debt service. And so either through internally generated, through a combination of internally generated profits and the town, sometime in 2027, 28, in 2027, we'll start looking and seeing how many more units we have created and how many we need for a moratorium. And then we'll start planning, converting some of those 20% AMI units to 20% SMI units. And we'll get that planned and set up. And by September of 2028, we'll make sure that we have a moratorium for September of 2028. We will still have it, in theory, that'll be somewhere between like maybe 15 to 20 units. Obviously, if one of like the big contentious projects goes forward, we don't need any units. So it'll all just depend upon what the development is, and what Hartford says. There's a lot of ifs between now and then. In general, for a project, so we have the capability to convert the entire property to affordable housing if we wanted to. That obviously is expensive.
Yeah.
And it's expensive in two ways. One is you cut down on the rents in general, going from market down to affordable. And apparently there's some sort of a almost optimization, and this is kind of a rule of thumb, and heard it from various people, some of whom have actually studied it and really know what they're talking about. So it's more than a rule of thumb for them. But when you get below 60% market, 40% affordable, then your market rents start to go down more. Because I mean, obviously, if you
It's not as desirable a location.
Yeah. That's
paying a
what studies
premium for something, it's one thing if you're majority premium, it's another thing if you're a minority, and if you're a small minority, it's a different thing. But again, we have lots of time to figure that out and see what the best options are for that.
What is the typical lease in Riverwood right now? I mean, are they 1-year leases or?
They're a combination ranging from multi-year leases to, I mean, most of them I believe are around 1-year leases. Some of them end up being short-term at a super premium. Others end up being longer term at a slight discount. So it's all across the board. And typically somewhere in the neighborhood of like 20% of the units turn over each year.
20%. Should. Ask questions for Scott. Each. So, don't see our treasurer on the screen. The 4 million, maybe someone, where's that coming from? Are we going to issue bonds or we have the money sitting in the bank? Or, yeah, just talk to the town, the impact, the immediate impact on the town. You know, are we the 4 million, and are we going to refinance it? If you could.
So
Tell us that.
currently it's a general fund, a fund balance that did
Right.
it from a cash perspective. But we just got the authorization for the bonding approved last night. So we will bond in the upcoming February, March timeframe to have that money come back. So what we're doing is we're setting up a separate debt service fund by itself so that we can put the asset from the loan perspective on the asset in there. We'll put the proceeds from the bonding back there, pay ourselves back from a cash perspective. And then the debt will run through there. Principal and interest and the interest, the accrued interest we earn will all flow through there. So it's not affecting anything to do with general fund taxes. And it will be its own self-sustaining fund in there.
Other than the
through the-
100,000 you're going to lose in tax revenues, that'll have to come out of the budget somewhere, right?
And that's a trade-off,
Yeah.
as you explained, yeah, to getting a little bit further along the path to our 10%. And thanks for
It's a policy decision. It's a public policy decision.
Yeah, yep. As long as
Sure,
people know
yeah.
what the trade-offs are.
Yeah.
Right.
And there is one other just quick thing just to mention that doesn't actually really have any legal bearing. One of the things that allowed the bonds to be sold, the subordinate bonds to be sold, was an understanding that this is important to New Canaan, and that New Canaan would likely, not forced to, backstop if there's any shortfall. So becoming a moral obligation on the town. We were going to actually pursue a formal moral obligation, which again, is just one of those things that literally all that it states is that if Riverwood were to forecast a loss, we would have to submit that whatever that loss was, we'd have to submit it to the town bodies, who would then submit it to the budgeting process. No guarantee but the town bodies don't have to do anything. There's no commitment whatsoever that they actually would have to go ahead and back up any shortfall. But what that gives the bondholders the surety on, as I understand it, is they sit there and go, okay, so you guys are saying that this is important. You're saying it's important because the 830G. If something's going wrong, how important is it to you? And at least it means that it has to go in front of the town bodies in order to say, whoa, wait a minute. You mean you could actually lose the project? No, we're going to go ahead and backstop whatever needs to happen. And again, the backstop is really minimal. Even under the stress testing of stuff, because of that 25% excess cash flow that can't be used for subordinate debt, there should be a very nice buffer inside of every year except for perhaps year 1, and then year 6 when we start paying amortization on the bigger bonds.
So there's no formal guarantee from the town. Was there
Correct.
anything in writing like a comfort letter?
Yeah, yes, there's one.
There's an acknowledgement letter.
Correct.
Signed by myself, Todd Lamieri, Mike Morrow. And then there is vision, I guess, that is
Yeah.
working through for another.
So it says the town would look kindly upon because you're stating that you would go and could present in front of the town saying, we're forecasting a loss,
Yes.
and that's fine. But I think what I'm hearing from Deanna is it's a little bit more, we would look favorably upon that request. Is that what the acknowledgement says, or is it?
It says that we will bring it.
Yeah, okay, all right.
By law, we can't
Mhm.
commit to any funding outside of the budget
Yeah.
process, so.
Got it.
couldn't
Makes
make that
sense.
Guarantee. We can just say we will do it.
I mean, probably the best way to look at it is it means that if there's an issue, it's going to come up publicly and I can't hide it. Deanna can't sweep it under the rug. It's got to come out to the town, and the town's going to know that this is going on. And since it's important to the town, hopefully there's the support in order to make sure whatever has to happen happens. And again, it's while anything can happen on a real estate deal, there's not that much rental property in New Canaan. We're not bringing lots of rental property on the market every year. We still got a top school system, and with the top school system, the rental property is pretty well backstopped. And so again, could things go wrong? Absolutely. knock on wood, it would be hard pressed to come up with a real scenario where something goes catastrophically wrong in which the dollar still has any value. So in case the fact that we're leveraged is all great anyway. So,
I have a question. So the additional 500,000 that you mentioned, the
Yes.
potential, is that going to be included in the bonds? Oh,
It hasn't been brought forward.
hasn't been brought forward yet.
It hasn't been brought
Yeah.
forward yet, so that would have to-
The other question I had is, in your cash flows, you included replacement costs?
Yes.
Okay.
And as with any property.
Right.
We've matched what we're supposed to match. Is that actually adequate or plus or minus? We don't know. We do have healthy replacement flows, and the property's in good shape now. Obviously, it's 25 years old, so it's not, we're going to start seeing stuff happen. But we did have it all professionally reviewed and also reviewed by some town residents who run big properties, and they were all impressed with the condition of the property.
Good. Good. Tony, anything more?
No.
Janet?
No, thank you.
Mary? Scott, yeah, thank you for your time.
Happy
Thank
to-
you, for all you do for this community, wearing so many different hats. And, I'm amazed at this, how the heck you did this. I don't know,
Well-
but it's impressive. I'll say that.
And I'll say that across, our community really came together on this. There was plenty of highs and lows. Deanna got to listen to most of them on a sometimes multi-times a day deal as the stuff was moving.
Fun vacation in August and early September.
But with that, the number of people that stood up in the town and stepped forward with advice, with actually offering under financial commitments, with expertise, with time, and it was a real community effort and a lot of support out there, which I found really rewarding and helpful again during the multiple downtimes in this process.
Okay, well, thanks for coming down, Scott.
Thank you all.
See you.
Great.
Yeah, good. So, Catherine, thanks for rejoining. Andrew, you came in. I think let's just quickly deal with bonding because it's related. You heard probably the tail end of Scott Hobbs' presentation on the mechanics of the acquisition of the Riverwood. And there's 4 million of town funding in there, and we asked about bonding in connection with that. But bonding obviously goes beyond just the 4 million for Riverwood. But we were told a minute ago that there was an approval last night for some bonding. So if you could just bring us up to date on where we are with bonding, and then we'll go back to Catherine. Thanks.
Sure. And Robin, I've actually been on the meeting the whole time. I guess you couldn't see me, or maybe my attendance wasn't announced at the start. But
Well, I'm pleased to hear that. I would have welcomed you if I'd known, but I didn't know. I didn't see your name in the corner, but I apologize. Good.
No worries. No worries. And Ann is probably better to speak to this particular bonding because frankly, I was not brought into this at all. So I really can't speak to this project. The good news though is in terms of having.
Okay, we'll just talk about last night then and where we are with future bonding in general.
Yeah. So we continue to pay our debt service timely. We are, I know Ann is currently working to gear us up for another issue in early 2025. I believe from when I last spoke to Ann, it was going to be sometime in the January, February, or even March timeframe. That's usually when we go out to bond. We find that that's when a lot of other towns go out to bond. So we tend to get the best rates when we go out to bond in that period each calendar year. And I know that we have, a lot of authorized but unissued debt at this point. But Ann would have the specific numbers on hand, especially including the latest approval from last night.
Anything you want to add, Ann?
Including 25, which was just approved, we're probably up at the $65 million.
65.
Obviously, the police station is still in there because only a portion of that at the time. We bond in arrears. So we wait till the project is done. So we bond what we need versus upfront on estimates. The estimate probably in January, February, which I was talking to our financial advisors on is probably going to be in the realm of 25 to 30+ million at that point. And then because we're also doing larger ones right now because of, the Playhouse, we have to finish that bonding. That has to be a certain level in the bonding level, 5% of the total tax exempt. So it'll be in that realm for the January, February, which is, in finding and talking to our financial advisors, that's the best time to go out for the muni market. They find we get better rates. Municipal usually get better rates around that time frame.
Good. Anything you want to add, Andrew, on what Anne has just said? Or?
No, I think she summed it up well.
It sounds like we're in a decent place, and thank you for.
Yeah, and just so you're aware, Robin, generally speaking, when we do go out to bond on most of our capital projects, we actually start those projects before we do the bonding. So we use some of our general fund cash reserves to cover the costs, and then we bond and reimburse ourselves. And so that's typically how we've done it in the past. And as you know, rates have been starting to come down a little bit, so we should get perhaps better rates on this issue than we did last year. But even still, we are, we have a lot of funds in our reserves. We just had a big treasury come due. So we certainly have the cash to cover our expenses in the interim. So there's definitely no liquidity issue here.
Good. All right. So that's item E. So any questions for Andrew? And then you're welcome to stay or not stay as you wish. Once any questions? No. Okay.
Well, I'll be off camera, but I'll be on the call. So if you need me to
okay.
say my name.
Sure. Okay. If we need you, Andrew, we'll get you back. Thanks.
Thanks.
So let's go back to thanks for rejoining, Catherine. So the other item that we wanted you to attend, and when we're done with this one, we can let you go back and finish our audit, is to do with, that's item 4, the related party transactions. So there was a letter that came to the audit committee from a resident of the town in connection with related party disclosures in our financial statements and ancillary matters, which you have and have seen. And the resident did ask if I read it out at the meeting, which I will do when we're done with at the end of this discussion. And we asked through Anne if you would address that letter and write to the audit committee with your to explain the audit work in the related party area and your views on disclosures of related parties under GASB Standard 62, both for the current year and in relation to years past. So I just want to summarize my reading of what you've said, and then you can correct me or clarify anything if you need to, and then I'll allow the committee to ask you any questions. But in accordance with you carry out your audit work on related parties in accordance with the auditing standards, as with everything else, and understand related party relationships and the transactions in any given year and how they're accounted for, and consider whether there's a need for disclosure, and discuss all of that with management. In this town, we have a requirement under our code of ethics for a statement of disclosure with the town clerk for related party transactions from the party concerned. You looked at those disclosures as well as what is in our general ledger and found no exceptions. The transactions for the current, well, not the current, the fiscal year ended 2024, according to your note, at 281,000, which in the view of PKF does not require, in your professional opinion, disclosure in our financial statements. But you add a point that we, the town, can disclose related party related party transactions in the footnotes, even if there's no requirement to do so. So have I got that right, Catherine?
Yes, that's correct.
Okay, thanks. So if anyone, you've all read this, if anyone has a question for Catherine or for Anne, and then I'd like to ask if anyone has a view on this last point.
Do we know?
On, you know, should we, I mean, there are financial statements as a town, should we disclose, and we don't have to reach a conclusion today on it, but maybe we get some
What do
views.
other municipalities do? Do they disclose related party transactions that don't meet the level of materiality according to the auditor?
I would say I don't typically see them in most municipalities, at least not the ones that I audit. If there are any, they're very, very small, like maybe $5,000. So they definitely don't disclose anything like that. But I did discuss with Anne, and we did come up with a paragraph to put in the footnotes. So you will see that in the draft.
Okay, all right. Sounds to me, and I don't want to interrupt anything anyone else might say, I won't wish to say or contribute, but if you've got it in, it's a draft. I mean, I think we take a look at it.
But
And,
so just to be clear,
you
so
see.
this draft then described is somewhat of a related party disclosure. Is that what this draft paragraph does? Okay.
Yes.
And
all right.
do we have a dollar? Have we come up or will we come up with a dollar amount that, or a percent of our budget that requires disclosure?
You could set a threshold if you want. We typically look at materiality. It's
Right.
below individually significant. So I would say, you know, you can disclose it because it's been brought up. But otherwise, I'd say maybe something over our individually significant threshold. You might want to consider disclosing. So in this case, I think the dollar amount was 281,000. So maybe say you want to set a level at 200,000 for the going forward in the future. But something.
We
that could
kept,
be
I
discussed
mean, are you
internally.
able to tell us what your threshold would be? I mean, if it was 500,000 or 1 million or 2 million, I mean, and you would say to the management, you should include, you need to include for fair presentation, a related party note, or do you not have a number you can actually just?
I would definitely say it's over 500,000. I would say that'd be something we'd recommend disclosing.
In
So-
general or as a percent of our budget?
As a, not necessarily a percent of your budget, but as your overall expenditures,
Okay,
As a dollar amount.
as a dollar amount.
as a dollar amount.
So there it is, 281,000. So what I suggest, and I'm open to other suggestions, is that we will get a draft of the financial statements next week, and you will all have a chance to look at it, and you're all going to send me your comments. And that'll include comments on what we see, which we haven't seen yet.
Right.
Okay.
And then, you know, Kiana, Anne, I mean, then we'll talk. See where we go. Yep.
Could I ask just Catherine a question? So materiality with respect to the audit. So it's 500,000. My background is typically there was a threshold for P&L, there was a threshold for like cash flows, you know, balance sheet. Across the board, is it 500,000? I mean, what is the materiality definition that you use as an outside auditor? Forget related party disclosure, just what you deem material versus non-material.
I mean, ours, it depends based on the fund. So your funds, obviously, the larger the dollar amount in the fund, the higher materiality will be for that fund. But looking at the footnote disclosures, most of these transactions are in the general fund. So I'm looking at the general fund and the government-wide materiality for that, which is based on expenditures in that fund.
Okay.
All right. Okay. Okay. So the resident asked that I read the record the letter, which I'll do. Catherine, you, if you want to go, you can. You know what this letter says, but you can stay. Up to you. So I'll just read it for the record, and then any of you can comment as you see fit. I notified the audit committee by email on September 24th, 24, of the following to add to their 9/26 agenda, which was the date of our last meeting. I'm stopping reading. That was 2 days before the meeting. The agenda was out. It didn't get on to that agenda just because it was so close to the meeting date and the agenda was finalized. And I'm not sure I'd even read it by the 26th. I received no response, nor was my inquiry addressed. I wanted the town council to be aware. The required footnote disclosures pursuant to GAAP and GAS, the town's audited financial statements are deficient and run contrary to the Connecticut guidelines pertaining to municipal ethics and transparency. In respect to related party disclosures, GAAP accounting standards codification 850. I think that's a FASB rather than GASB, because it's a different number from what is mentioned. It's not GASB 62. Mandates financial statement disclosure for all related party affiliated transactions, including the nature of the relationship, a description of the transactions, including those with no or nominal amounts, the dollar amounts of the transactions and their effect on the financial statements, amounts due from related party and the terms. Related party non-disclosure can lead to fines up to $500,000, imprisonment up to 20 years and several lawsuits. Upon discovery by elected and appointed officials of a previously undisclosed related party transaction, the previous audited financials should be restated and or disclosing the transactions in the current financial statements. Non-compliance should have resulted in a qualified adverse or subject to auditor's opinion. In one example, the town, and this is all the different departments that were from this related party, participated in approximately 2,448,995 in related party transactions without competitive bidding, with one high elected official with dominant influence for the period August 2815 through July 24. This includes 453,712 in transactions for the period from January 1722 to August 423 without any ethical disclosure to the town clerk. The same related party votes on the town budgets, which include appropriation of taxpayer funds to these transactions. The same related party sat on ordinance committees and appoints vets and votes on nominees to the town's oversight committee, audit committee, and board of finance. A direct conflict of interest, self-dealing, lack of control, internal control, lack of segregation of duties, lack of checks and balances, lack of transparency, and lack of best practice in financial reporting. Additionally, the management representation letter to the outside audit firm signed by the town executive should have addressed the related party transactions, but did not. So that's the letter. I undertook to read it out. I wasn't asked and don't plan to open it for debate. I was asked to read it, but I think although it didn't get on the agenda and was not acknowledged at our September 24th meeting, I think, was it 25th?
The meeting was the 26th.
26.
We did subsequently.
We
right?
did
We did
acknowledge
at
it
this-
on
at
the
special meeting.
23rd.
Yes, at our virtual meeting, of draft minutes of which are posted online. That's the meeting on October 23. Those minutes, we did in the meeting acknowledge receipt of the letter, and it is minuted. Okay. The one point I want to make is that our auditors, Catherine, I think she's left now, has informed us that for years past, the volume of transactions. Sorry, beg your pardon. The volume of transactions did not rise to a level that required disclosure under auditing standards. The writer quotes figure 2.4 million covering a roughly 10-year period. But in any given year, Catherine is telling us that it didn't meet the threshold and that our financial statements are correct and their audit opinion is correct. Okay. Should we move on? Sorry, I beg your pardon, let me put this on airplane mode.
Yeah, I mean, just again, I know we're not voting here on anything. I think sort of the key takeaway is our external auditor saying there's a materiality threshold.
Mm.
It has not been met, certainly at least for the most recent fiscal year and likely for prior years as well.
That's what she's saying,
so it
yeah.
does not require related party disclosure, which I know it has a different view than what our local taxpayers written in. Two, my understanding is that it appears that all the appropriate internal processes were followed with respect to filing any conflicts and that whole
Ethics
bit,
disclosure,
right?
yes.
With respect to that. So that's all good.
One more point to add. I mean, I talked to Diana about it yesterday, just to confirm now that this individual is on the Board of Selectmen, which is where purchases get approved, is recused when a vote is taken. I mean,
And that practice is being followed.
that's being followed. Previously, this individual was a related party as a member of the town council. The town council is not in the business of approving, you know, these sorts of transactions. It's the Board of Selectmen, of which he is now a member, but I'm sure is not voting on yeah. That's another aspect.
Right.
Yeah.
Right.
Okay. All right. Done what I was asked. So, and Diane, Dr. Lindsay, sorry to keep you so long, but can we now turn to, why don't we go with, I don't mind, the order. We do town or BOE first, the latest financial reports and anything you want to update us on. I think we got from Joshua this morning, and I haven't read them, so you'll have to summarize. And Sean, did you send us?
Reason we got them this morning is we just put them in front of the Board of Finance this week. So, yeah, no, I just wanted to make sure, you know, yeah.
Just give us the highlights, yeah.
All right, good morning. So our latest report, financial report that's been reviewed with the Board of Ed is the September report. The October report will be reviewed Monday evening.
Okay, September was reviewed at their October meeting, yeah.
Yeah.
Right, okay, just give us the highlights.
So as of September, our operating fund actual is $19.5 million, which represents 17.8% of our full year budget of 109.1. That spending rate of 17.8 is just slightly above the prior year, which I attribute to just timing differences in terms of when bills are paid. As far as school lunch goes, our revenue totals 373,000 as of September, which is 12% of our full year budget of 3.1 million, and it represents a year-to-year increase revenue-wise about 1%. Expenses through September are 305,000, or about 11% of our full year budget, and a year-to-year growth of 13.5%. So 13.5% growth in expense versus 1% in revenue is attributable to basically startup costs for the year. Typically, we typically run a loss in the beginning of the year, given startup expenses, and then as revenue starts kicking in and the fixed expenses
Okay, yeah.
deteriorate, we start making money. So it's unusual to, for a self-operating food services to make money, but we're doing pretty well. So those are the highlights.
Superintendent, you anything to add or? Thank you, sounds.
And I thank Brian for that.
Yeah.
I mean, all good on Elm Street.
All
Yeah,
good.
Good.
Yep, we are
yeah.
expanding our footprint just a bit to get a little breathing space for some folks upstairs. And it's all going very well.
Is there, so there's some space you could just take on?
About 2,500 square feet available.
Oh, good. Yeah, that's good.
A big difference for us as far as confidentiality, privacy, voice issues.
So school going, there's always, every day there's something, but I mean, overall, at a high level, all
Yeah,
good.
it's going very well. We're having another excellent year. Our kids are thriving, with Halloween and the parades and all of that in our elementary schools. And, but yeah, we're having an excellent.
And the sport programs are
Athletics,
thriving.
yeah.
Yeah.
Yeah, we recently were ranked number 18th in the country for best high schools for student athletes.
This is all sort of all sport. It's a
Yeah, for all of our
combined.
student athletes, in the 18th out of over 11,000 schools. I mean, you think California and Texas and Florida and some of those enormous districts that are much more focused on only athletics. It really speaks to the comprehensive nature of the program that we're able to offer.
Yeah.
So very proud.
Yeah.
Our visual performing arts program is thriving.
So many excellent extracurricular activities that we have. So, and that's why a lot of people want to come to New Canaan. No complain. Yeah, no, thank you. Right, Anne, thanks.
So the financials you have are draft October. We have, I'll start with the revenue because that's the major driver of some of the changes. Our tax collection is on par with last year from our collection rate. We still have a strong collection rate.
It's easier.
Permits are on target, short over last year by 11,000, but that's just timing issues on different permits and how they come in. One thing we did see though, long-term, moving to the new system, OpenGov has been very successful. The permitting online opportunities for developers, residents, that has been very successful. Our conveyance fee, slightly ahead of last year, which is good. So it's still on target for where they believe. And obviously conveyance fee is tough because usually the biggest movement for us is May, June, and that number can go either way at that point. So, but we're on target right now. Parking revenue increased a lot. A lot of changes. They changed the permitting, the dates last year of when to apply the permitting versus July to, I believe it's to September. 1,000 permits have been sold. So we're seeing the comeback of COVID, what the effects of what COVID is. And there's approximately about 100 still on the waiting list for it. So
The permits are significantly up on last year.
Yeah. And then there's a year-end adjustment.
Change that renewal from September, probably October, is everybody being away and.
Yeah.
So
Right.
because, being more kinder or gentler approach to late fees, we thought maybe when we talk.
We could stop on parking for a moment. So Dion, I read your latest and very good newsletter. So the parking study, survey, whatever you call it, is done and it will be analyzed. So just briefly, parking affects all. What happens? What's the journey from now? What happens next?
So as you said, it does affect everyone and everyone has an opinion. So we really are socializing it. We've met with the retailers, the retailers and the restaurants and everybody. I think most of you, or if you don't know, during my campaign, I mentioned that we have a backwards parking system in this community. We pay for our least valuable parking and we give away our most valuable parking. So this parking study was the first step in looking to, make a change. And we are going to be putting in, Stacy is adding to her budget, additional funds for iron mics, which are the, machines where you
Yeah,
can
yeah,
pay for parking. So we are moving along. It will be a slow process. It really does need to be, brought before lots of people, because it won't be easy. And I'm sure I'll get lots of emails, whatever we
Oh.
decide.
So that would get rid of free parking. pretty
On
much.
Elm Street, but my proposal, there are more slots in Park Street, the Park Street lot, and with some changes that we're looking to do in the alleyway between Le Pen and the movie theater. There's a ramping that's being looked at so that, and then a drop zone up there so that people that would park up there would be a ramping. So strollers and things like that could easily get down to Main Street if they wanted free parking back there. So we're looking, there are more spots back there. So we're giving away a few extra free spots to, at least the thought is give away more free up there that's less convenient. And then charge for the more convenient parking. And so that's the thought. So it will be a slow rollout as we.
Well, thank you. As you said, you've got 5 opinions here, I'm
Yeah.
sure. 20,000 out there, right?
Yeah,
So,
yeah.
yeah. Thank you very much. Do you know, is Tiger going to join us or you don't know?
Did you want for the
Well,
police department?
Yeah, it was really the police
He was in a
station.
meeting.
Yeah,
but I
the
believe-
police department, I came out late because it's the police department building committee meeting today. So.
Yeah, no, I just asked if he was around. Yeah, let's finish with Anne and then
Okay.
we'll come. You didn't speak to him or?
He's in the meeting. So
Right,
I
good.
think
Okay, don't
between
worry,
the two,
don't
yeah.
worry. Yeah.
Interest on investments is ahead of last year by 255,
Mm-hmm.
which is very good. I think part of that is because we did a bonding earlier this year. It replenished the funds, as we said we do we bond in arrears, so it replenishes those funds for investment. So we're keeping lower balances in our account. Tipping fees are over last year. They're doing well. We think a lot of that could have been from storm-related things that are coming in, because that's, that is a bit cyclical as well. So that's the revenue side of things. On the expenditure, we are on target. We control everything between purchase orders, everything that's been encumbered already, payroll, barring any storms, which we will keep our fingers crossed. We've been doing very well. Expenditures are on target for budget.
Okay. Okay, thank you. So Deanna, the 2 major projects, I mean, the 2 things that I've got here, and I didn't ask Tiger to come. I mean, I could have done, it's really the financial side. I mean, there's 2 things here. One is the police station. I mean, I attended last month's council meeting when Bill Roberts spoke and Tiger spoke and had some beautiful slides, and they cannot believe what the inside of that thing looks like visually. I mean, to me anyway. And finance was on track. The other thing is just to understand the implications for the town of that mountain of dirt in Waveney Park near the swimming pool. And you've got all these 1-page ads from the New Canaan Athletic Foundation looking sponsors, donors, and naming rights and all this kind of thing. And I don't know whether you can tell how is that whole thing being funded? It's on town land, and what is the implications for the town and funding or backstop funding or anything? So, I mean, if you don't mind.
So I can, I'll address the police department and the Capo field.
Okay, so
yeah.
You're acting director of public works for the next 5 minutes. Yeah.
That's fine. So before I came in here, I was just at the most recent police department
everything,
building committee meeting where they approved some gym equipment that would be going into the lowest level of the police department building. And by the way, Tiger and Joe Zagorensky weekly have a Wednesday morning 8 o'clock walkthrough. So if any of you want to do that with them, just reach out to Tiger and, they'll be
8
happy to
o'clock on
do.
Wednesdays.
Yes, I mean, they'll want to know that you're coming.
No, no,
so-
no, no, no. no.
But yes, yeah, I've gone multiple times, just to kind of get the update. I haven't been in a couple weeks, so I'll probably need to do it again sometime soon, but they're willing to walk any members of the bodies in town through. So right now it's on time and on budget. We still have, just under $1 million in town reserve contingency left. And then I think it's like, I have it here. I think it's like 430,000 left on Turner's side for contingency. So, there's still money, to absorb any overages between now and hopefully, next summer it will be done. They're targeting an earlier, completion date, which will help all the costs, obviously, but, I don't want to jinx it and, things always happen. So, we've had, a few delays along the way, but, in general, Turner's been doing a great job of continuing to move the project forward.
When does the rent, the lease on whatever the building is, where the police are now, when does
Oh
that?
gosh, I don't even know. I mean, it's the old Board of Ed building. It's 39 Locust. How much do we pay?
really-
30,000? I think it's like
around about 30. yeah.
30,000, I
Making a
think. but-
turn on us from the police, so, sure, no, yeah, okay.
Yeah,
Right.
so, and that is what it is. So that would help, obviously if they finish earlier, we get out of Locust Avenue earlier and then, so that's what we're all aiming for. Everybody's hopeful. It's tight over there, they want to get out as bad as everyone else. So,
No, I mean, it's good. Any questions on the police project?
So when do you think it?
it was scheduled for like the fall and I think we're hoping for the summer.
Summer.
But
That's what they said.
that's an early finish. So I
Okay, so
think,
the fall.
Yeah,
Mhm.
that's consistent with what they
Yeah.
said to the town council.
Yeah.
Okay,
and then Capo Field,
Yeah,
the
the
town,
other
the
Capo
town
Field.
gave them $2 million.
2 million, right?
And that was budgeted and that was in the last budget cycle. And then the project is around 6 million, I think, maybe a little less, but any additional.
The 2
maybe it
million,
was
that's
5.
gone, that's
Actually, it
gone
might
out
have
the
come down to
door.
5, but whatever it was, that's all on the fundraising.
2 million's gone. I mean, that's, yeah.
That was budgeted.
that's-
And they have
it.
everything they need according to the presentation that we received on Tuesday night at the Board of Finance. The Athletic Foundation has all the additional funds they need to complete the project in a bank account. And they got a small loan. So they're probably fundraising to shut down that loan, but they are on target and they've got a very generous, obviously we have very generous people in
So
the
the
community.
athletic council got a loan or
I think
or
it might
whatever
have
the organization is.
I
It's
think it
to-
might have
A personal, like not a bank loan. I
Not a
think it might have been a
Yeah,
personal loan.
no.
I don't know though. You know what? I don't want to
It's
speak
not
out of
us.
turn.
It's not us, yeah.
It's not us.
They're not on.
They
the hook.
got what they got and they're not getting any more.
so that they
And it's been
technically-
very clear.
so between the town and loan/donations, they have the funds now to.
Yes, yes. There's no
Anyway, we're not on the hook for anything.
no
more.
additional
It's
dollars.
totally different from some of the earlier projects that were done. Athletic fields, public-private partnership.
Right.
Yeah, okay.
Right.
What are they doing with, I love that old style field at Mead, right? So what are they doing with that now? 'Cause-
That will still be used. I think the big complaint is there's a big tree in the middle, in the outfield and it's not.
Classic.
I'm not sure the high school loves the idea of
Old
going for a fly
school,
ball and
you
maybe
know.
hitting a tree,
not
but
us.
No, I
But
mean,
it's
that
still-
is a park of yesteryear. I mean,
Yeah.
It's really,
Yeah.
I like it a lot,
Yeah,
so, I mean, it'll still be there. It'll still be used.
but not used by the varsity. Right, because the varsity team's going up to
Yes.
to Wake.
That's the intent, that will be a varsity field. And actually in the presentation, because it's a turf field, they are looking to be able to use, sort of the outfield for extra swing space for practice time for, various sports. Yeah. So you're still going to have a baseball field, but because of the surface that you could, when it's not in use for baseball, you could use the field space for practice in different seasons. So.
Okay, and the girls didn't lose, they did lose the softball field through this or not? I mean, I
It's
know the
still
Marshall
there.
softball field is
You know
off to the
what?
side, right?
You know what? I don't think, you know what? I don't think they
Probably
did.
have to
I think
rejig
there's,
all the other fields to accommodate somehow.
yeah,
So it's,
I have to say I'm not up to speed on that part of it. So,
Okay, good.
All right, thanks, yeah. Oh, good. So can we move to item 5, the report from the
Sure.
internal audit
So the,
subcommittee? There was a meeting. What was the date of that?
it was November 1.
November
I got
1, it was a public meeting.
It was.
And let's get a report back.
So on November 1st, we had the kickoff meeting for the audit subcommittee meeting. And members of the committee are myself, Janet, and Tony. Janet kindly offered to take the role of secretary. So thank you, Janet. And I ended up being the chairman, but it's a very collaborative group. As a reminder, the purpose of this subcommittee is really to oversee the internal audit work, to be performed by, some combination of CLA and CONRES that can really act as a liaison with the full audit committee. No major decisions are really going to be made by the subcommittee. They'll be brought before the full audit committee. We spent some time talking about the scoping. And if you look at both of the proposals, in one form or another, they each talked about kind of doing start off with an enterprise-wide risk management analysis. And I think it was a sense of the committee, rather than first spending all this time and money on doing this enterprise-wide risk, I think the sense was, let's just focus on the end-to-end process out of the box, like procure to pay. And so the focus would really be on all expenditures. I think we agreed, and folks jump in if I misstate anything.
This would be like a first project. Right?
Yes, this would not be, so we would not focus on payroll. We would not, on this go round, we would not focus on compensation or benefits. It's really non-benefit related expenditures.
Or buy from third parties.
Yeah, in an ideal world, it would also pick up capital, right? And we're really talking about a holistic end-to-end, from the minute there's an inkling to procure something, purchase something, to the end of the payment cycle, right? So it would be the whole cycle. And I think the view was, let's look at what are the procedures, what are the policies, what are the controls, what have we documented, what have we not documented? And I think the sense of the committee was, we'd love to come out of this process with where needed, additional controls and or supporting documentation that the town can use. It may be that certain areas we may be doing everything correctly, but maybe it's not properly documented. So the hope would be that this firm could help. And in one of the proposals, it talked about, we sometimes will come in and help towns update their written policies, or maybe certain areas they don't quite have good written policies. So this would be not only to evaluate what we have, but then to help us get where we may or may, where we think we want to be. So it's a pretty holistic approach. And I didn't get a chance to touch base with Sean on this, but I think the thinking would be, be in an ideal world, it'd be great to do not only the town, but also, the schools. And again, it's really, this is not meant to be a gotcha kind of thing, but it's really to look at controls, policies, procedures. How do we go about procuring outside? And it would also pick up, I think, as a subset of this, things like related party transactions. Let's revisit, what are those controls? What are those policies? What are we doing around that? Everything from the RFPing. So,
and enforcement of
bidding.
And the enforcement of it. Are we following through on that? I know, Ann, we didn't want to double up on what the audit committee might have done in prior years. So Ann has kindly agreed to help find sort of the old internal audit reports, and make those available.
You're looking for those?
Oh, perfect. Great. And that's great. So that'll be helpful because we just didn't want to do something that the internal audit committee had done a couple of years ago, and I don't think they
Well,
had.
not a couple years, because as you know, none of
Yeah.
us have been, Janet, you were on before we started.
Yeah, we
And
were
then you
just
left.
talking about it when
And
I left. We
and
hadn't
I-
done anything.
and
I think
I-
it was done kind of
and
in
I
the
came during
2016.
COVID, when
Yeah,
there was
they're all.
nothing. So none of us have been
When my
there, and I've
COVID
never
was on.
seen a report. So
Okay,
good, you've got something.
Okay.
So at least we can, we can see what the findings were.
yeah,
I mean,
okay,
we're obviously talking 5, 6, 7 years ago. It must
Okay.
be, yeah, depending on what was done when. And there were some works, and the BOE on their own have commissioned a certain amount of internal audit work back in the day.
and I think the committee raised a good point. They said, and so I've been sort of tasked with this. I need to certainly, at a minimum, I'm probably going to be speaking with CLA next week with the idea of to sound them out on, hey, we want to throw out, let's not jump into that enterprise-wide thing. Let's first take a look at this as a first project.
So
this
you're
sort
going
of
to
end-to-end.
communicate with them next.
I'm going to try to set up a call with them and go through and say, does this sound reasonable to you? We want to forego the 20,000 or, enterprise-wide management study, because they all want to do that first. And we think they're, that, while that may be helpful, they will have to do a bit of
We may
that.
want to do it one day, right?
Yes, but they will have to
Yeah.
do some element. There's going to be an element of diligence
Yes.
involved in this.
And
to-
learning.
and learning both.
Yeah.
And so they're kind of going to be doing it, but it's not going to be looking at everything from, this is the IT risk, this is that risk. And so,
Yeah.
but can I be just one last point?
Yeah,
I
yeah,
think,
yeah, yeah, sure.
so I was going to have a discussion with CLA next week, report back to the the subcommittee. And I think when we were talking about timing, given sort of some of the budgets and then finishing up on some of the audit, I think it was sort of agreed that it really wouldn't, the sense was probably January in terms of when we could kind of get the staff to, because it will take some time on the staff to be involved in this too.
Yeah, that makes sense to me because, we meet first week of December, hopefully finalize the
Right.
ACFR, and then that's not the end of the journey for you or me. It goes to the council, and I don't know what date they meet, and then, next thing we're into holidays, so.
Right.
January sound,
Yeah,
I
no,
mean, will
definitely
consume
January,
obviously
get
some of
past-
your time, feasible, yeah.
Get through the audit, get through the audit.
Yeah. That's still like,
So-
I mean, when you're done, all of you, I'd just like an update on Cone Resnick, but let's finish. Obviously, project is with CLA, but I
Yeah.
don't know if you're going to come to Cone Resnick.
No, I mean,
it sounds,
It sounds like Cone Resnick.
and anything you want to add on,
Yeah,
Tony or
bonus.
Janet, on the meeting or discussion? Or
Well,
what
I
you
think
said?
what's gonna happen with CLA is, I think we have to find out what the scope is at the end of the day, okay? And what I mean by that is, we're gonna present this to them in regard to, this is what we'd like, but I truly would like to understand what the scope looks like
Yep.
and what the dollars potentially look like.
Yeah,
Absolutely.
definitely.
Yeah.
Absolutely, yeah. I mean, they're going to have to come, once you've sort of briefed them with a proposal, and, at some point before we start work, we're going to have to sign an engagement. letter.
Yes, well, in fact, it's very,
Exactly,
Our budgeting
exactly.
is starting. so-
Exactly.
Well, and in all the proposals, they basically say, we do these enterprise-wide meetings, all this risk assessment. And then we sit down and scope it and then give you so there will be that. I totally agree. And it may be, there will have to be some preliminary meetings where they're going to come back and say, okay, this is what it's going to look like, right? So I was going to have that call, report back to my subcommittee colleagues
Right.
and take
And then
it
I
from
guess
there.
it's got to come to the full audit committee to approve the.
I suppose so, yeah.
Yeah.
Once you
Yeah.
have
Engagement
buy-in from your colleagues, yeah.
Yeah, and I think Ann and Sean would be, very much play a role in a lot of
Absolutely.
this. So,
Mm, absolutely.
would
We,
be
we
pretty
want to work
instrumental.
collaboratively with, the committee and management.
yeah. So,
Good.
And then
Resnick.
Cohn Resnick, my understanding is that still, they're down to the issue of the liability, you know, the indemnification, and that's still an open point.
A quick update in that in terms of, I think it's going to be a policy that if this committee wants to agree to the terms of what, we're to the point where it's like, okay, now it's going to be a decision if this policy wants to go forward with their agreement versus our agreement. That's where we're at. So I'll get those terms over to you so you can take a look at the agreement.
I mean, it sounds like we'll have to put it on our December
Meeting to take a look
meeting
at. Yeah.
agenda.
And I'll get the documents ahead of
Yeah.
time for you to look at.
Okay.
Excuse me.
Just really one issue about just one issue, is it really?
Liability, I think there was a technology fee question in there too. If
I thought the technology
they
fee,
waived it totally.
yeah,
away.
it went away, so we're down to one issue.
Mm,
And then they just waived it. Okay, so it's just really one thing.
I hope we can
We can't.
resolve it. They came across very well at the orals. Anything more from anyone on item 5? No. Janet, Mary, sorry, have I missed any? We've done 1, we've done 2, we've done all of 3, right?
Yep, we've done them all.
4.
I've got them renumbered.
5. We're supposed to finish by 10 o'clock. We can try and do that. Any new business? Anything else anyone wants to
Not for me.
raise? And anything from you, Diane, Sean, anyone? Fiona? New business?
No.
No. Okay. Can we then have a motion for adjourn the meeting?
I'll move it.
Second.
So moved. All in favor? Meeting adjourned.